You know the economy is bad when a quarter of people have to go into debt just to pay for basic needs. Not iPhones and iPods, we're talking about food and rent. But if you look at certain individuals or publications, they'll tell you certainly that everything is great. You can choose what to believe, but there are facts you should never deny. Are you ready? You came here for the truth, so let me unveil that for you. Looking at the economic indicators that the government provides will give you one picture. If you're looking at the unemployment rate, the GDP, obviously this looks very, very good. However, if you're willing to accept the truth, if you're willing to look even just one layer deeper, you're going to get a much different picture. So if you do have the courage, I'm going to show you some details today that are just one of many, many videos that I have done showing you similar statistics. So while I'm going to give you one piece, this is just a fraction of everything I have covered. Let's get into it right away. Americans have an average of $6,500 in credit card debt. That's according to a new Experian report, and I'm going to show you the details of that here. A full 23%, my goodness, of Americans say that paying for basic necessities such as rent, utilities, and food contributes the most to their credit card debt. That tells you something that we should be concerned about. That's nearly a quarter of individuals that every single month goes by, they are paying 17% interest on their credit card, and on average it's $6,500. As with all of these surveys, when we look at the details here, you find that they are always a small sample size. In this case here, 2,200 US adults. So you might think to yourself, well, this isn't really giving me a picture of the entire United States. And I do agree with that. This study alone only gives you a very small percentage. However, if you look at all of the different ones that I have shown you over the months, over the years, you get 2,000 here, you get 10,000 there, you get 1,000 here, different surveys, different companies, different locations across the United States, sometimes globally. Then you add it together, that starts to really paint a much better picture. So while this one doesn't tell us that, think about how many times I've shown you the examples of individuals living paycheck to paycheck. That happens so often. I mean, we've seen numbers in the 50% range, we've seen it in the 70% range. It could be any number. All I wanted to disclose to you is that it's worse than what they tell us in the general economic numbers that we see, the unemployment rate and so on. Another 12% say that medical bills are the biggest portion of their debt. So a lot of people find themselves in that unfortunate circumstance. And this is typically why individuals today are in such a heavy burden. They hadn't been planning for a medical emergency to pop up, and then suddenly it does. And unfortunately, a lot of people are in a bad scenario because of this. Middle class life is now 30% more expensive than it was 20 years ago. The cost of things such as college, housing, and childcare have risen precipitously. Tuition at these public universities doubled over that 20-year period. Housing prices quadrupled. Okay, there's more information in here if you want to check it out, but I have so many different topics to cover today along with this, and it's all going to connect into each other. Incomes have not kept up with home prices. This is the absolute most important factor when we look at real estate. If the average individual cannot afford the average home, we have a problem. Home prices dropped during the subprime mortgage crisis, but grew since 2012 and continue to outpace growth in income. And of course, they will continue to do so for the foreseeable future. There is no possible way that income is just going to rocket higher. So of course, this always does get out of whack. We see that typically time and time again. They will come down, they will go up, and so on. This is of course expected to come down at some point. Right now we have seen mortgage rates that have come down to above 4%. This may create a nice little boost, but we'll see what happens because individuals are very concerned at this time. The actual consumer confidence, not the numbers that you see, it seems to be very low based on what I have calculated here. And of course, as time goes on, this will only get get worse. The interest rates have been kept so low for so long, and it has not been able to actually create any meaningful gains. And unfortunately, this is burdening people to the absolute maximum. There are so many different reasons for this, and of course, we've covered that all before. Out of Bloomberg, I just wanted to show you this chart. Loan problems, student debt making home ownership less desirable. Obviously, this has increased to astronomical levels as time has gone on. Individuals, particularly younger individuals, haven't been able to afford what they thought they would at the age they thought they were going to be able to do so. We've seen many different reports based around that. JP Morgan slashes second quarter GDP forecast to just 1%. Previously, it was 2.25%. So obviously, they are believing that the conditions that we are seeing today are going to have an impact, and we will see the numbers when they do come out, and see a 1% would mean very, very slow growth at this time. We'll see if they are correct. I have no idea what it will be. Ultimately, the numbers are always really padded, and we've seen that time and time again how they do so. But only time will tell. Now, obviously, the trade issues are having a big impact on business on both sides of this equation here. So it's not just the US, it's not just China that is really dealing with this. It happens to be a global issue, in fact. Downtrend in semiconductor sales is worrying. I wanted to give you this because I think that it is truly important. The information coming out of Deutsche Bank, the blue line is the semiconductor sales, and the ISM is the manufacturing index. Obviously, good to have those two together, and we can see that over the last year or so, this has really come down. Now, it does fluctuate. There are cycles here. We saw the same thing happening basically 2015, 2016 timeframe, where China was really struggling. Among the whole world was basically struggling, almost went into a full-blown recession globally. The market in China still hasn't come up to those levels that we had seen previous to that. So ultimately, there has been a struggle that is going on, and I just wanted to cover this because it is all interconnected. If you see how all of these points seemingly are not connected, if you actually just take a moment, those individuals who deny it would actually be awakened to it and might have something to think about. China's biggest chip maker to withdraw from the New York Stock Exchange as the trade spat with US spills over to technology sector. So this happens to be out of the South China Morning Post, just showing you here. Is this the beginning of many companies that will do this? We'll see. We'll see how it all happens. Of course, we're seeing a lot of Chinese companies that are perhaps worried about their investments in the United States at this time, and maybe they're trying to sell it off. There are companies that are trying to get rid of their real estate. I just covered that, I believe it was yesterday, and so on. So this information is just the tip of the iceberg, of course, because there are billions and billions of dollars worth of investments happening on a regular basis every year from China into the US. So we're going to obviously keep a close eye on that one. So there was essentially a banking failure in China, and the People's Bank of China actually had to take over this company. They had to deal with it, apparently only for the next 2 years. We'll see what happens. Obviously, they are not doing well. There are many different reasons for this. This isn't the only institution that, of course, has failed. Look at the last video I did talking about how banks fail all the time. There have been 555 institutions that have failed since the year 2000 in the US alone. My goodness. So we can see how this really doesn't get reported on the daily news all the time because they don't want to make you scared about what could happen to your money and to the establishments that you do business with. Ultimately, individuals today will suffer because of what's happening with robots and automation. Corporate profits are the ultimate necessity for any company. They want to make sure that they are making the most amount of money possible. There is no exception to the rule. DHL launches its first regular, fully automated and intelligent urban drone delivery service. So you're seeing this here, what it looks like. Apparently, it can shrink the delivery time from 40 minutes to 8 minutes, and of course save them a lot of money in the process. They were talking about how Amazon spends, I think the number was $28 billion, don't quote me on that, but let's say billions of dollars that are spent every single year on all of these transport to get the product from the warehouse to the individual. And if they find a way to do so reliably, obviously they're going to go with that. We'll see how that happens in the future. I think they're far from actually doing it on a regular basis, but who knows, maybe they got something up their sleeve. Ford's way to finish driverless deliveries, package carrying robots. It's a headless robot in a driverless car. So if they actually go this route, autonomous delivery, and actually make it happen, well, it's going to be a big change, because a lot of people are employed in these type of fields, and it's obviously going to be a serious impact on all of these people and what they do for a living, because as the company start buying this technology, it's going to get cheaper, it's going to get better, it's going to actually replace a lot of individuals, and unfortunately this could mean an impact to the economy in a negative sense. So this is definitely something to watch out for. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting me, supporting this channel and the truth, so I do appreciate that. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, A to Z, foundation, history, asset classes, making money. All other details you need to know are in the link in the description. If you want the audiobook, that's available at themoneygps.com. The economy is not doing well. I have a video that covers many factors here. Click on it and I will see you there.